Welcome everybody. Welcome to NFP Friday. Something a little bit different if you're joining up now. A little bit late in Australia, but I thought I'd hop on and do a little bit of a live stream for you guys, just so you got a bit of context with what I got marked out at the moment. This green box, this is a rejection block on the 1 hour chart. And obviously you can see what we've done from pretty much NFP leading into now the first macro. We've just moved from here to here, right? So we've moved down. But what that is left is buy side liquidity. The thing is, when you're looking at a market and the conditions like we're seeing now, you're not just going to take any long position at all, right? You need to still have a bit of context. So my viewpoint based on what we're looking at in the market here is if, and it's an if, we could come up and close above this level, that would probably yield a good entry to go long. However, until that point, there is nothing to really look at. And for the meantime, let the market do its thing. So on the 1 hour chart, I'll just show you guys what we're looking at. We'll go to the 15-minute first so I can kind of scan down. And the thing is, how I trade, it'll be the same on any session, right? Right now it's New York session, it could be London session, Asian session, it's all the same. Now, there's a few things. 15-minute chart, there's nothing, right, for a very long time. But if we go on to the 1 hour chart, a little bit higher time frame, I'm looking at this area here, this wick. That's what I'm looking at as an area. But I'm also looking at this little sell side point here, which we've just kind of taken out. So my viewpoint that I'm thinking is if we go to a small time frame, say on the 5-minute chart, I want to see this as a big power 3. Accumulation, manipulation, then distribution back up. That's what I'm looking for. Now, obviously, we've still got 10 minutes before the macro, but this gives us time to plan, is the way to put it. So we've just swept liquidity. We've also got this rejection block, which can act as support. And potentially we've got, 3 drops pattern here to then move back to the upside. So there's a few things that could happen here. But at the moment, being heavily bearish, just going to wait for the market, let it do its thing, let it give us a bit more direction. But potentially we could be seeing a 9:30 to 10 Judah swing, which would be something I'll be looking into. And then from there, we can kind of play it by ear, is what I'd say. So I may do these streams. If you want these streams potentially once a week on a Friday, I was thinking maybe Fridays can be a stream for YouTube, New York session. Obviously, I'll mainly trade the London session, but I'm happy to kind of hop on and have a chat. But that's kind of what we're looking at. And we'll discuss, price action as we move into the macro as well. But that's what we're looking at. Any questions, post them in the chat. Happy to help out. Good morning, good night, depending where you're from. It's quite late here in Australia, 11:40. It's been a while since I've actually looked at New York session. I did want to have a look at New York session though, especially because of NFP. I thought it'd be quite interesting to have a bit of a look at. And we'll see what we get leading into the macro. Not too sure how long I'll have this stream for, but I'm thinking, once a week we'll go live on Fridays, depending on the response. So there wasn't really any notice on this. So I just kind of decided at the moment to hop on and have a bit of a stream. Not right yet, not at the moment, but we'll see what this next macro does. So I want to see if we can have a power 3 like this: accumulation, manipulation, distribution. This green box, that is a 1 hour wick, essentially. So I'm treating this wick as a fair value gap. Let me just show you guys that. It's pretty much this whole wick here, right? I'm treating this wick as an FVG, essentially. So I want to see, how we trade inside that wick, but there's nothing yet because it's still very heavily bearish. So the manipulation move is probably still important, I think, to consider. And if you go on the 1 minute chart, you'll see, right? Down, down, down. So we need to wait and be patient. And then I think if we be a little bit more patient, the market can reward us in these situations. I mean, typically NFP anyway is low risk or tape reading, one of the two, depending on your experience level is what I'd say. So I'm just going to send this out to those on Telegram, because you guys obviously are mostly coming from the Discord or coming from YouTube, that green box is a 1 hour wick. It's a wick on the 1 hour time frame, which I'm potentially using as a fair value gap. All right. So we're going to see how this 5-minute candle closes. That is a wick, again, on the 1 hour chart here. It's this candle. It's a rejection block. This candle here, this really long one. It's come down, it's swept sell side here. I'm using that wick. You can, I might make this a bit of a different color. Let's go maybe, you can mark out the quadrants of this area. So you can mark out, the halfway point, the different quadrants to see if price wants to react from those areas. So I might do that to start. But that's pretty much it. Because it's so heavy-handed, you've got to be very careful with how you approach the market. But that's kind of what we're looking at. Any questions, feel free to ask. Feel free to send in any questions in the chat. I'll do my best to respond. And I'll probably be on for a little bit, because we'll see, what this macro does. So I want to see this as power 3 essentially is what I'm looking for. But the question will be, leading into this macro, what do we do? You know what I mean? So the macro is here, and you get people saying to me, Ruben, what if there's a setup right now? Would you take it? Well, there's no setup right now, but if there was, if it was valid, of course. You can enter a trade 5 minutes before a macro, 10 minutes before. If you've got enough market structure, then I don't see anything wrong with doing that. The issue comes, I think, for a lot of people, if you're going to be over trading, then it's an issue. And then you should probably stick to macros and just stick solely to macros to get used to, sticking to a process. That's what I'd say in regards to that. Yeah, it might be a weekly thing. It might be a weekly thing. This is the NASDAQ. Right, so on the NASDAQ, same thing, US 100, except this is the futures contract, continuous contract. It might be a weekly thing, right? It might be a weekly thing. I haven't really decided yet what I'm going to do, but there's going to be a few little changes in the future. So yeah, this could be one of them. So let's just kind of see what we do. And the range is huge, right? Keep that in mind. The range is massive. So even from, looking at this high here to there, that's already 100 handles. So we're selling. The range is massive for the meantime. Mexico. Where are you guys from? Let me know in the comments. Where are you guys from? I've got two. So the premium Discord, I've got the lifetime. Got a sale running at the moment, 35% off. If you're interested, code is join. And I've also got the month to month. But apart from that, YouTube's here, free Discord's there too. Singapore, Uzbekistan, US. So always just look at the market, let it do its thing, let it do what it needs to do, and then go from there. Melbourne, yeah, okay, cool. So similar time frame to me then, still pretty late. I mean, it's Friday night here, not much on tomorrow. So this is the halfway point of that rejection wick, right? And then ES, yes, it's the same thing, right? It's the same thing. Now, as we let the price do its thing, for those that trade other sessions too, there was a few little scalp longs even here. There was some losing ideas earlier in the session, I believe. And then a nice little scalp winning here and a nice little scalp winner there. The thing to remember, doesn't matter if it's New York session now or, say you trade PM session, after lunch, Asian, whatever it is. You've just got to follow a system. UK, Perth, cool. Perth, you guys are what, 2 hours behind, so to be, well, maybe 3 hours behind. It'd be either 8:47 or 9:47 for you guys in Perth. You got to remember, right? You got to remember that if you have a system and you follow that system, that is the most important thing. Keep that in mind. A lot of people will win or lose, doesn't matter, and think that that'll dictate how good their system is. Not necessarily. Like, you're going to take wins and losses with any system. The main thing is, if you take a loss with a system, appreciate that it's just probability. Probability will play out. You're going to have, you're going to have trades where it looks good and it doesn't work out. You're also going to have trades where it doesn't look good and it works out. So you've got to balance that and balance that mindset when you're trading too. And that's probably one of my biggest pieces of advice. I thought about it, and recently this month for me was quite a good month with props, 10,000 props Australian dollars. And I realized that, look, on one of my accounts, you might have seen the recent video, it was a 50% win rate. And people are going to go, well, that's not high enough. It is. As long as you're managing risk and you're controlling risk effectively, 50% is okay, 60%, 70% is okay, even 40% is okay, 30% could be okay. It all depends on what's the size of your winning trade, what's the size of your losing trade, and how long are you holding your winners for, how long are you holding your losers for. Does that make sense? There's two factors. Those are the stats that you need to keep in mind. So I traded two different accounts, right? Two different variants of the My Fund of Futures account. One was a starter account, right? Two payouts, one at the start of the month, one at the end. The second was an expert account, and it was just one, and then at the end of the month I got the payout. Now, the expert account I'm more aggressive on because you can be. The starter account obviously it's got consistency rules, but the difference is interesting, right? The starter account over 80% win rate, the expert account at 50%. But the reason for that is because starter accounts, or accounts where you're going for base hits on, you're going for less risk to reward. Typically, lower RR leads to higher win rate, and vice versa. So there'd be plenty of times on the expert account where I'd enter a trade, I'd trail my stop, I'd get stopped out, I'd re-enter the next trade, same idea, break even, because I have to be aggressive based on being in high position. And then maybe the third position would work out. So you've got technically a full-size loss, a very small loss based on commissions. And then you come back for that third trade, and that trade is the one that actually brings you over the line. Or sometimes it's a first trade straight away. So anything can be profitable. Any system can be profitable. Any win rate can be profitable. Start with one-to-ones. When you get comfortable with that, then try to branch out into a 1-to-1.5. And then experiment, between 1-to-ones, 1-to-1.5s, holding runners, taking partials, and you'll find a sweet spot for you and your psychology in different market conditions. That's what I'd say. Not one shoe fits all, not one strategy fits all, if that makes sense. How long did it take to be profitable? Well, you know what? I started in 2023 in May, so it's over 2 years. That whole year I saw no payouts. My first payout was in 2024. It might have been in maybe January, Feb 2024. And my first payouts were with Apex. Then I moved to Top Step. And then now I'm with Top Step and My Fund of Futures, with a focus on My Fund of Futures just because of the rules. And I like the rules better, right? Since then, pretty much every month payouts. And in terms of getting consistency, I just aim for, a couple thousand to more than that, into the 10,000s every month. That's what I aim for personally. And if I get extra, I get extra. Like, I just I cruise. I don't copy trade. And I keep it nice and steady. Right, we're in the macro now. I'm just going to mark some things out slowly because it's starting to print a little bit. I want to actually do this, and I will get to your questions too, so I can see it on the side. I'm just marking out this whole space, which is that rejection block wick. Imagine that space is a fair value gap. Imagine. And ICT always talks about, with fair value gaps, to mark out quadrants. Does that make sense? That's all I'm doing here. That's all I'm doing. So I'm just seeing if price wants to react from sensitive levels, And at the moment, the only one that we're kind of touching on is this bottom one. That's all I'm looking at. If we break through this, then I won't worry about it. But while price is sitting there, I do look at it and I just leave it. I just leave what we need and I just watch, right? As you can see, there's nothing here yet. There's no inversion. There's no consistent delivery. You might say, Ruben, what about this one? And this might be a good talking point. What about this, Ruben? Why not take this inversion? Could anyone tell me in the comments? Why do you reckon that inversion doing this is too risky? What do you reckon? Why do you reckon that's too risky? Who's got an idea? Based on what's happened, why do you think that's too risky? How many accounts should I scale in after my first payout? Well, it depends, right? With any prop, right? With any prop firm, with any sort of accounts, it depends on your circumstance, is what I'd say. And this will be a good one for anyone too, right? If you're in a position where, you know, you're working and you've got income or you've got savings and you can afford to get a few accounts is great. It gives you flexibility. You know what I mean? But if you're in a position where you can't and you can only get one account, then you stick with one. But you just have to appreciate with one, it might take a little bit longer to get where you want to get, but you have to just appreciate that, accept the position you're in, and either take the time to do that or focus externally on the financial aspect and then mitigate that and then come back. There's two ways to do it. And a lot of people I know, they'll go back to demo trading for a bit, work on the outside, you know, finances, come back in, you know, 6 months time, 4 months time, and they're in a better position than to trade. They've still got the skill, they've still been trading, and then they can, you know, start to scale up. That's what I'd say. Discord link, I'll post that here. It should be, give me a sec. I'll post in the chat in a second. How long did it take to master your emotions? Well, the interesting thing about emotions is that emotions are always there. They're always there, right? Mastering emotions, I think the word is probably you become better at making less mistakes. You still make mistakes, I still make mistakes, but you become better at managing those mistakes. So for example, two people might enter a trade and two people might say, you know, it's a bit of a risky trade, but two people enter the trade. Now, one person might go, okay, well, I'm going to go on tilt. The other person might say, well, I'm not. How do those two people differ, and how does it even come into, you know, fruition? You just got to trust your system. And a lot of people, the emotion will come from fear or greed. It's one of the two or both. And both of those will come from two things: not trusting your system, or you're trying to make money too quick. And you're trading because you want to make money really quick. And it's not going to work. Trust me. The more you try to make, the less you're going to make. Yes, you might get lucky a couple of times, but you won't be consistent and you'll blow up more often than not. So mastering emotions just comes down to, like, for me, I know and I accept that what I do in my strategy is not 100% win rate. I know that and I accept that. So a losing day, winning day, whatever it might be, I know that it's just a part of the system. A lot of people are not at that stage yet, and they might think that, look, if I take 2 losing trades in a row, then there must be something wrong with my system. That causes them to do silly things, change the system, and then before they know it, they feel like they don't know anything because they haven't stuck to that same system long enough to figure out when it works and when it doesn't. So that's a big part of it as well. Without emotion, trading is boring. Yeah, I mean, my belief is trading, it shouldn't be boring necessarily. I don't think boring is the correct term. I don't think that's the correct term, but you should get thrill from trading only by following the system, not by the profits, if that makes sense. Like, you should get enjoyment from trading when you take a trade, it works out, but it followed your system, not just because you made money. And the same would happen, right? If you took a trade and you followed your system and it was a losing trade, you should be okay with that and happy with that. Does that make sense? So I kind of agree. You know, you need some emotion in there as well with trading. You need to be under a little bit of stress to perform, most people, but not too much stress and not too, like, you've got to balance it out. You've got to balance it out, is what I'd say. At the moment, we're going to see at 10 o'clock, see what we do there. A lot of the time, these hourly candles have volatility, but I need to see more market structure. So even if, here's the thing, even if we were to reverse here or pivot here, you've got to wait for more because we've just had a massive, massive drop off in price. We've swept this little sell side point down here, but you need to wait for more. Like you need to wait for price to do a bit of this, maybe pull back, and then you can take a continuation later. Wait for more structure, wait for more confirmation in these situations. Otherwise, it's like you're catching, a falling knife, as they say. But they're good questions. Yeah, they're good questions. And most people face the same thing. I'm human. Everyone faces very similar things, but different people are better at controlling it than other people. Or, different people are better at managing emotions. Or some people, it depends on your circumstance and your mindset towards trading. That's the biggest thing, I think. Accepting that it's going to take time is crucial. That's a crucial part. But great questions. Keep them coming. If you've got any questions, keep them coming. So in this situation, you might say, well, what would I look for here? Well, I'd need to see more market structure. If we are going to move up here, then I'd look for a pullback and then a continuation of this initial reversal if we get the reversal here. I'm not saying it's going to be, and this is the benefit. When you're trading or when I'm trading, I have an idea in mind, and the idea is that we could react from this level. We could. We're in a macro, we could pivot, we could reverse. The word could is not certain. It's not 100%. And that's really important. Don't associate your strategy with certainty. Associate it with higher probability. And then your trading will change. It'll become much easier. So I'm thinking we'll see what we do in this rejection block here. But at the moment, it's still very heavily bearish, as we know. So, if we go to even like a 15-minute chart, look, still very heavily bearish. What we're going to need to see is a bit more structure. Have a look at this part too, right? So that's the 1 hour rejection block. I'm going to limit this. Look, I'm going to reduce this to this candle. See that? The wick. Wicks can be treated like fair value gaps. So essentially, I'm treating this wick like an FVG. I'm zooming that across like this to where we are in price currently. I'm just watching to see if price actually respects it. If we don't, then it's a matter of just letting the price do its thing. Right? The macro's in action, as we can see, but there's nothing, right? There's nothing. And you might say to me, well, why not go short here, Ruben? Why not short? We're going to go lower. Because we've gone down 400 handles already. I'm not interested. My model or my system would require for a short, if you're curious, if price did this, then yeah, 100%. We'll go for shorts and look for shorts, 100%. But a big part of evolving as a trader is understanding that any market movement, or for example here, where's 100 handles? This is 100 handles from here to here. You might sit here and go, oh, I should have taken a short from this macro. It's not the right mindset to have. If it follows your system, go for it. If it doesn't, let it do its thing. And yeah, that's your little news candle, 10 o'clock too. So my bias is really seeing if we react from this area on the 15-minute chart. If not, then back to neutral. Back to neutral. Because obviously very heavily bearish for the meantime. So it's like we're catching a falling knife at the meantime. You can see, right? We can go even to a higher time frame to assess that. Typically, I won't. Typically, I don't need to. At this point, look, it looks like we're coming for these lows at this point. We've just swept out these ones, or this one, I should say. And it looks like we're coming for these lows. And these lows are formed about 2 weeks ago. So it's quite interesting. If we come for these lows, then yes, we've got a 1 hour fair value gap that price could use over here. And the only reason today I'd be looking at the higher time frame like this is because there's nothing else on the smaller time frame. Typically, the 1 hour time frame would be sufficient. Sorry, the 15-minute would be sufficient. But at the moment, there's really nothing there to look at. And you can see a massive dump. For weeks, we've been stepping up and up and up and up and up and up and up. This was, 2 days ago, 3 days ago? Dump, 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 dump. Which could mean once the dump's finished, next week we just slowly work our way back as well. So something to consider. So lives, I'm thinking of doing them once a week for the meantime. It is going to change. I will say that. I haven't really put the full plan out yet. But when I do come out with a plan, I'll let you guys know. So I would like to go live for sure on YouTube a bit more, you know. Typically for me, I trade the London session. So for me, New York session is going to be once a week if I go live, potentially on a Friday, Thursday, Friday, something like that, or Monday. It doesn't really matter too much, but one day a week, just because right now it's about 12 in the morning in Australia and it is quite late. It is quite late. So for me, most of my trading is done in London session and Asian session, and that's kind of sufficient for me to capitalize on. That's my thoughts. Like if we're seeing price be this aggressive, then, you know, we can watch price come down here. We've swept some of these lows now. Look back on the 1 minute chart. That's your 1 hour FVG down here, which we've just tapped into, it looks like. But what we'd need to do, a lot of people are probably looking at M and Q. Why M and Q? Because the range is huge. It's huge, right? So let's have a look on M and Q. We've come down, we have swept that low. These two lows we've pretty much swept too. This is what it looks like. This is your macro, which you're currently sitting in. So 950 to 1010. I'm just watching to see, like, based on the structure here, the only thing we could use this macro for is a little power 3. So you could use that as, you know, accumulation, use this as manipulation, and then obviously with an inverse that has impulse here and maybe a closure here, look to take price higher. That's it. That's it. But for the meantime, need to watch price and let it do its thing. You can look on slightly higher time frames if you want as well. Right, so obviously then, you know, there's a 4 hour fair value gap here, which typically I don't look at that time frame. Like I don't look at the 4 hour, I look at the 15 minute, and that's about it. So we've swept liquidity, we've tapped into an imbalance. Yes, we may want to reprice, but we need to see some more market structure. There'll be different points that signify to you different things, is what I'd say. Inversions are one thing, right? There's different levels, right? An inverse is one thing, but these down close candles like 1, 2, 3, 4, if we break and close above that, that is a change in the state. A combination of two things is much better than one or the other. But this low down in the range, yeah, just not really interested in shorting or longing at the meantime. But that's kind of what I'm thinking for the meantime here. So let's get this. Let's see what happens. You know, let's see what happens for the remainder of this macro. But that's pretty interesting, right? So at open, but just a big sell-off. Just a big sell-off, and we're down. Well, it looks like we're down about 2%. 2% for the day. 2% for the day. So what would be interesting to see if we could do that for tape reading purposes today is something like this. Accumulation, manipulation of some sort, and then some distribution. Something like that, you know, give or take, as a bit of a tape reading exercise. Use NFP to either tape read, to do lower risk, or to trade, depending on how you like to do it. At the moment, I don't go live during London session. That may change. That may change in the future, yeah. So if things start to form, I'll just mark them out. We'll discuss price action. Typically what I do, I'd mark out the volume imbalance as well. Right, so sometimes people do this. Nothing wrong with that. But you can also mark out the volume imbalance up here too. Which the volume imbalance is just this little space. That little space there. Typically, you'd include that inside the gap So at the moment, it's still like a bearish gap. This here is just the inverse, but that's the volume imbalance included inside that inverse, if that makes sense. But you can see that, right? We're still in that area. It's still a bearish gap for the meantime. Any questions, post them in. Happy to answer. And obviously, Fridays is an interesting day because if you do the right thing, you go into the weekend feeling pretty good. If you do the wrong thing, well, obviously you think about it all weekend. So the best thing to do is to follow your rules. And I tell people all the time, if you have a good week or you have even an average week, and let's say you'll break even for the week, you don't have to trade Friday. You don't have to. You can leave it and come back in the following week and use this as an opportunity to tape read, whatever it might be. So there's definitely, there's options. There's options for you depending what you like to do. And at the moment, I'm just in the 1 minute chart. These lines, if you're curious, these are just previous sell side points essentially. So you can see on the 4 hour chart, just a previous line sell side, previous fair value gap on the 4 hour chart, really big drop. All that pretty much is low resistance. You could even go to a higher time frame, but technically here, look at that. Quite a large drop in price. So that's kind of what we're looking at. And then 1 minute chart, nothing as of yet. We'll mark PDRAs out if they form, and when they form, then we'll go from there. So I'll mark things out. If we close above, we'll call that an inverse and a change in the state. A change in the state delivery would be a closure above the body here. That would be a change in the state delivery. My advice would be this too, right? Let me just fix this for a sec. Depending on where you are in terms of trading, what I'd say is this. If you're not familiar with PDRAs, I would go to ICT's content because he's got, some good content. Obviously, he's the author, if you want to call it that, of a lot of this stuff, or he's packaged it together in a way that makes sense. Now, in terms of all these PDRAs, I think it's his core content. And if you're curious about that, just let me know in the Discord. If you're in the free Discord, just send me tag me, and I'll send the link to some of these videos. So he's obviously got videos about, order blocks, breaker blocks, whatever they might be. You know what I mean? All these different things that come into play. Realistically, in my opinion, and this is just me personally, I truly believe that all you need in terms of PDRAs to understand, probably these. That's it. That's all you need, right? Fair value gaps act as support or resistance. Order blocks tell you if the market's continuing or reversing. And inversion, fair value gaps, same kind of thing. That's all you need. You don't need, in my opinion, to know every single PDRA. If you want to, feel free to, but you don't need to. Does that make sense? Because obviously, there's heaps. You've probably seen different videos. You've got breaker blocks, you've got mitigation blocks, you've got propulsion blocks. What else do you have? Volume imbalances. There's so many different PDRAs, and it can be very hard to go, well, what should I learn or what should I focus on? Please keep in mind that the PDRA is just an entry model. A PDRA means nothing without any other context. That's really important to keep in mind. Rejection blocks. I mean, a lot of these things, I'll point two things out here, in terms of these PDRAs. So rejection blocks and volume imbalances, I treat those, I treat them the same as a fair value gap. It's just a fair value gap in my eyes. It's no different. It's no different. And you know what else is the same as a fair value gap to me in my eyes? New week opening gap and new day opening gap. It's the same thing. The reason why I say it's the same thing is because we're looking for price to find support or resistance at these areas. Does that make sense? That's it. And so if we're looking for that, that's all we need to see. So when you're learning like these, use this as the basis. Just learn how to identify some of these things. But I'll tell you, I don't use any of these top 3 at all. I don't use any of those at all in my trading. Zero, zilch, zero, right? I don't use any. The reason for that is because I don't need them. And when I'm looking at price, these things are just act as, support or resistance. That's all it is. Just support or resistance in the market. But it's a way to, I guess, visualize that. Does that make sense? That's all it is, guys. So if you learn that stuff, you'd be sweet. And then, on top of that, if you want other concepts to learn, I'd probably look at this. I primarily trade macros, not always, but primarily. But I'd be looking at that. So these are the PD rays I'd study. I just have, if you're going to go a bit further, have an understanding of what these look like. And then if you engage one of these, you just treat it like a normal gap, like a fair value gap, doesn't matter. All I mean by that is this. Let's say you had this happen. Say that's like a, bearish fair value gap, for example. And price comes up into it. We're looking to see if price does this, right? But if price doesn't do that, and then it breaks above it, it becomes an inverse, right? So fair value gaps are a critical thing to learn, 100%. But this box could also be a new week opening gap, and price could trade into the new week opening gap and reject, and you treat it the same. Or price could invert it and find support, you treat it the same. So you don't want to overcomplicate things with ICT. It can become complex when you're looking at things and researching. You want to try and simplify it as much as you can so you can apply it to any market condition. Does that make sense? So I'm a big believer. A few people have asked me, what's your trading plan, Ruben? What's your trading plan? Or should I have a trading plan, and should it be, extensive or simple? Simple, for sure. Simple. Always simple. Because you want to feel comfortable implementing something regardless of the session. So not a lot of people from my Discord, even YouTube, a lot of from, New York session or trade New York session. Some trade London session, which is fair enough too. But that's kind of, what I'd say in regards to that, because otherwise you're going to confuse yourself. And when I started learning ICT, I wanted to do everything. I wanted to do all the top-down analysis. I wanted to do, everything. And what happened was I couldn't get anywhere. What made my life much easier was using the 15-minute time frame most of the time. And I say most of the time because today we didn't, but most of the time. And then also using dealing ranges. That's it. And using a combination of the two. That's all you got to do. And your strategy, you should be able to explain it in 2 sentences. If you can't, it needs to be simplified. So my strategy, if you're curious, if I had to simplify mine in 2 sentences, I look for areas in the market where I'm expecting price to do something important. When price engages these areas, I'm looking for a macro and an inversion and a change in the state. Bam, done. That's it. This here, look, that's enough of a range. We've already gone 40 handles. You could just take a little bit off here and then go to break even, because the range is massive, and let the market do its thing if you're in a trade. If not, just taper it, because when you're trying to catch a falling knife, you just never know. See, in this space here has higher time frame FVGs. It does, guaranteed. I haven't looked at it, but I know it does, because look how many red candles there are in a row. Many red candles in a row. Let's go to maybe a 5-minute chart look. What do we see? 5-minute gap. What could price do here? React from this gap. So what should you do as a trader? You should mitigate risk. Does that make sense? Take your 1-to-1, take your partial, and then move on. Stop goes below order blocks. Right? You're done. That's 50 handles. And this is why I'm on the micro contract, because the micro contract obviously is more suitable to these conditions. But this is typically what I look for anyway. In the macro, sweep liquidity, powered 3, change in the state, inversion, order block, entry from there, stop below the order block, and then go for a 1-to-1, take a partial, and then if you want to hold runners, you hold runners. That's what I do. That's it. And we saw it today. That's all I do. How do you handle losing streaks? Currently undergoing a bad losing streak and lost to find it. I have 2 XFAs currently. Well, you're in a good position. So what I'd say in that regard is, look, it might feel like the end of the world, but it's really not. And the fact that you still have 2 funders left is a good position to be in. If you lost a funded from following your rules and you lost it, like just from following your rules, then just kind of accept that it's probability. And, for the start of this coming week, downsize your position to build your confidence back. Downsize it for a week. There's no rush, And then when you come back after a week, even if the next week is losing, even if you lose this following week, you downsize your risk, you're not going to lose as much, and you can start trading with normal risk the following week, and your probability should play out. If you've got a profitable system, it should play out. So that's what I'd say. And if you lost the account because you over leveraged, did something like that, then accept that, look, mistakes will happen, and you'll do a little bit better next time. Because no one's perfect. Does that make sense? So if anyone has lost an account, and I've done it before, everyone's done it, where you break your rules, you risk maybe a bit too much, especially in the learning stage, then look, you got to go back and reflect on it and say, look, I know what I did was wrong, but I'm not going to dwell on it too much, because if you dwell on it too much, you're going to use that and you're going to try and make things back the following week. You may as well let it go. And in your position, obviously you've got 2 funders left, which is more than enough. It's more than enough to trade on. So yeah, hopefully that makes sense. But this is a typical framework that I'd use. This is something I'd study. And this is like a macro-based trade. So obviously the news comes out, the news manipulates. We can see that. We accumulate, we manipulate, we distribute. All you need to take a trade, in my opinion, is a 1-to-1. And then if you want to hold runners, you hold runners. You don't have to hold runners, but you can. Does that make sense? So you could say here, let me just hold 1 micro or something, for example. Or you could say, you know what, it's Friday, I want to be done. Say in Australia here, it's 12:20. In reality, you'd be saying, okay, I'm done, right? I don't really trade New York session, but hopefully this can illustrate to you that this concept or these concepts that I teach, they work in all sessions, guys. And I know today worked out, it might not have, I don't know how it's going to play out, it's probability, but it occurs in every session. There's a few losing ideas in London session, followed by a few winning ideas, and then a winning idea here. So it's probability plays out, and you just got to keep implementing the same system. Even if you have a few losing trades in a row, that's important. Yeah. Because everyone has losing trades. I have 2 losing trades in a row. I have 3 or 4 sometimes in a row. But what it'll matter is how I manage that. Do I keep trading the same account? Do I swap to a different set? That's what makes a massive difference. That's what's going to preserve the capital. That's what's going to keep the account. And if the account is over leveraged, then I don't dwell on it. In the past, I don't dwell on it, but I just reflect on it. I understand what I've done and I move on. It's the easiest way to put it. Easier said than done, but you've got to have that mindset. And it's not to say you're doing silly things all the time and saying, I don't care, but you need to have that mindset of being able to come back and have resilience in the market, is my opinion. For 5,000 account, what is your stop loss every trade? You might have meant 50 or 5,000. I don't really have a 5,000 account. I use 50K funded accounts. But it depends, Risk is something I can't really comment on. Like typically for a 50K account, people risk anywhere from people I teach, anywhere from 100 to 600 on a 50K. But why is there a difference on a 50K account, 50,000? Because people have different risk tolerances and different buffers. You know what I mean? So if someone has a buffer, maybe they're willing to risk more. I'm like that. If I got a buffer, I might risk a little bit more and then A plus it up. That's just kind of how it goes. But you start off small is my advice, and then you move on from there. I'm not a financial advisor, but yeah, start off very small with an amount where if you lose it, it's like investing. You're not gonna feel it, if that makes sense. So this is obviously a 1 minute fair value gap, but I know there's a 5 minute FVG here too, because we had a look. And you don't need to switch back to the higher time frame right now. You don't. You could have just looked at the price leg like this price leg here, and marked out any of these fair value gaps like this, right? Like that. Mark those out. And do this, right? Draw a Fibonacci, swing higher, swing low. I'm going to draw this out so you guys can see. 0, 1. Just look at this. If you're in a trade, you want to try and enter below the 0.5. We've done that. We've talked about that. When you get to the 0.5, if there's an opportunity to partial, because the market moves between premium and discount, and it could always reverse around here. It doesn't have to, but it could. Right, so you can see that fair value gap rests above halfway, you can take a partial. If it pushes up here, take another partial. Right, but at least you're covering your risk. You're not, going, oh, I'm just going to hold it. Cover your risk. Take something off, build confidence in the system, and then on a different day, when we haven't dropped multiple hundreds of handles and we're not catching a falling knife, then yeah, okay, hold a little bit longer without the partial. But for the meantime, pay yourself as a trader. So that's how I do it. I don't really need to look at the 5 minute chart or 15 minute chart once I've already looked at the higher time frame. And to devise this entry here is a little bit weird today, but yeah, we just used the 4 hour time frame. We swept sell side here. We tapped into a fair value gap and we're inside a macro. We had the power of 3, accumulation, manipulation on news, change in the state delivery, inversion, order block formed right here. And then target a 1-to-1 partial, go to break even. And the rest is the rest. But that's an example of a trade that I'd take in different sessions, So I don't trade New York session. I've traded a few times in PM recently, which is pretty early for me. It's like 3-4 in the morning, but sometimes I wake up fairly early. But for me, that's much easier than trading New York. I'm used to going to bed earlier, waking up a bit earlier, but I thought I'd hop on today on Friday because it's NFP. Thought I'd hop on and give it a bit of a test. Did anyone take longs here? Anyone look at longs in this position? And who's from my Discord? Let me know. If you're from my Discord, let me know. If you're from just YouTube, also let me know here too. And we're going to have a look at the Discord. We're going to see who's been taking longs. Let's have a look. Yeah, it looks like someone did. Yeah, cool. But let me know. Anyone take longs? Anyone take longs? See, I don't want to be a signal service. But my plan with YouTube when I do more live streams is something similar to this. So I'm going to give guidance, but I'm not going to say to you, look, enter here, put your stop loss there, because that's not my job. My job is to teach. My job is to mentor and to let you guys build confidence and to mark out the PD rate. So then what you need to do is look at that and go, okay, when I mark this out, do I think the same? And if you think to yourself and you go, I don't trust what he's saying, I don't think the same, don't take the trade. Use it as maybe a little bit of, guidance, or use it as a bit of a framework, but always, always, always trust your own judgment. And it doesn't have to be me. It could be another guy, another girl, right? Whoever it is. Always, 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 before you're going to take a trade, ask yourself, do you believe in the trade? And if the answer is yes, then that's when you take it, if it follows your system. If it doesn't, don't just take it because someone else says to take it. Make sure it's in your own, in your own doing. And now this will just be a situation where, if you're in a runner, you just let it run, literally, because since we've come down so far, you might be able to capitalize on a massive move back up. And every time we tap into these gaps, you're just observing price action. There's zero risk on the trade, like zero. And you just literally you hold for as long as price goes up. You can have a terminus. You can have like a point where you go, look, I'm going to take it off here. And that terminus could be one of these gaps. It could be this buy side. It could be this buy side. Or it could be I'm just going to wait and hold. There's no right or wrong there. It just depends on what you like is the best way to put it. That's a framework. Pretty cruisy. Pretty cruisy for today. So in terms of the draw liquidity now, it's a good point, right? The DOL, the draw liquidity. I want to talk about that a little bit more. So here's the thing, right? This here is the initial reversal point down here. Where price currently sits, I would not engage in anything, in longs or shorts. And you might ask me and think, well, why is that, Ruben? I wouldn't engage in longs because I know that we could just do this at any moment and continue the trend. That's why I wouldn't engage in longs. In longs. I wouldn't engage in shorts because there hasn't been confirmation to go short yet. So in terms of where do I think price will go, well, provided we keep inverting these bearish fair value gaps, we're going to move higher and we're going to rectify what we've done for the whole day, right? Which we've gone down. If price does something like this, I'm still bullish and I'll be looking to see if we respect that inversion to still do that. Does that make sense? So as long as this inverse holds, I'm still bullish, essentially. As long as the top portion of this, inversion gap holds, I'm still bullish. But I wouldn't go for a long right here because I know that we could pivot from here. And so the way I see it, sometimes in the market, if you miss the opportunity, the original opportunity, you may have missed the move. And this is where the idea of FOMO, we can talk about that, can pop in the mind of people because you might go, oh, I want to take the trade. I missed the trade. Now, of course, maybe you could take a long and it shoots up 100 handles from me. It could. But imagine how bad you'd feel if it reversed just down here, swept liquidity, and then went in your favor when you could have waited for price to reverse, reject, and then take the entry. So that's kind of my answer to that. I believe the draw's higher, provided we respect those areas. And that's kind of where I leave it. I stick to one narrative until it's proven wrong, so I don't like switching too much. I stick to the one narrative. That's what I'm thinking. But really good questions. Ask away. The chat is open. Open. And you can also do this, right? Look, you can mark out optimal trade entry. Like this. So we can remove this and remove that now. We've inverted that now technically, right? This space here. Notice there's no indicators here. There's not that many lines. Like we don't even really need this. All we need is liquidity, macros, and market structure. That's it. Just simplifies the process. If it works for you, like I think indicators can make your life easier, but if you got like all these lines and things on your charts and you're thinking, oh, I can't see things, then you probably should think about removing some. Or you might have like different things like new day opening gaps and all these little lines on the chart. You don't necessarily need all that. If it helps you, use it. But if it's starting to conflict, don't feel like you need it just because other people say that. Does that make sense? Neither. In this case, is it safe to buy or sell? I wouldn't do either at this point. I'm not in a position, like typically for me, like I'll draw a few things out. But typically for me to consider either, if I was going to go for a continuation, I'd wait for a pullback and then take the continuation from down here. I wouldn't long in the level of premium. And I wouldn't short because there's no confirmation yet to short. So we're kind of in no man's land. We're going off this original move down here that we discussed. Long position, which has already gone, 1-to-1. It's already ran 100 handles, it's crazy, right? The range today is huge, for NFP. Quite a big range. And I may cut this up, right? So I'll cut this up tomorrow morning. What is it? It's technically the morning here already, 12:30, but I'll cut this up in the morning for the breakdown of from start to finish, what we're looking for. But hopefully that makes sense in terms of, you know, buying or selling. I wouldn't do either. If you missed it, you missed it. And everyone's different. Some people enter off order blocks here, but for me, not interested. This, in my opinion, is the entry. That is the entry. That's the best entry. It's the macro. It's in power 3. We've swept sell side. We've got impulse. We've got an order block. We've got a change in the state. We've got everything we need to consider it. For me, if the 15-minute CB inverses, that's when I flip bullish, yeah. Yeah, if that, well, you know how I was saying I want to see a power 3 before? We could still get that. We could. And if so, then yes, we're going to move much, much higher. So earlier on the call, we're looking at this, right? I think we hopped on roughly about here somewhere. But I was looking at this as a potential power 3. It could still be. It could be like a bigger power 3 there. And then we've also got a smaller power 3 here. So definitely could still be. But if not, if it's not, like say it was like yesterday where we just kept moving down, then this is an opportunity to scalp. So what gives me confidence here to mention this is the macro. The macro, the sweep, the power of 3, and the impulse. Write those things down. The macro, the sweep, the power of 3, the impulse. Those things will give you insight. They'll give you insight into what you're looking at. And I mentioned those before, right? The concepts you need this, you need this. That's it. That's all you need to build a model. And today, we've seen multiple of those things. So if you're not in the Discord, I've got a checklist right on the Discord, which I think is quite good. And in that checklist, it's free. It's in the free education section. There's a few things that are in that checklist which I want to go through. The first is macro. And were we in a macro today? Yes, we were. Did we have SMT? No. Did we have a sweep of liquidity? Yes. Were we in a deep discount? Yes. Were we in a fair value gap? Yes. Did we have impulse? Yes. Did we have low resistance? Yes. So notice out of those 7 things, we had 6 out of 7. It's perfect. It's a beautiful trade. There's nothing wrong with it. It's an easy framework. Even with a falling knife, it's an easy framework to take, even with lower risk. And this is also, like, I love New York session. It's been a while since I've looked at it, but this is also what ICT refers to as the 9:30 to 10 Judas swing. Because what's price done from 9:30 to 10? Move down. Then we've also got a Judas swing here at news. News can do important things. In this case, it's manipulation. And this is a small fractal power 3. Even if the bigger one doesn't play out, that is enough. This move here is enough to call it a day. Like this literally is enough to call it a day. That's it. That's all you don't even need any more. Like, yeah, you could try and hold more, but you don't even need more. This is enough down here. That's enough. That's enough. So you got to kind of be content with those situations. And as you say there, Zodiac, yeah. Macro, sweep, power 3, impulse. That's it. That's how it is. And look, like before, there's nothing. We discussed, I think I mentioned earlier why this one wasn't valid. See that? Why is that not valid? Why is this inverse here not as good as this one? Because here we've swept important liquidity and we've done the power 3. And look at the difference in candles. Like the news happens, look, the news happens and manipulates. Here, the news hasn't come yet. So yeah, we invert this. This is where people get caught. People say, Ruben, look, there's an inverse. There's a change in the state. Number 1, there's news coming up. Number 2, we haven't swept internal liquidity and there's no power 3, so it's not as good. And this is how you can save yourself like little losses that do add up in the long run. The losses do add up, but this is like, yeah, really good framework. You know, quite a decent setup. And even here, if you get a close proximity entry, say you've got a close entry there, you're still having a good framework. It's still a very good trade. And notice how we waited. This candle looked like it was going to close, but we waited for the volume imbalance to be closed above as well, not just this. You could have done that, but this gives you more confirmation. So by the time that closes, you've got a change in the state. You've got an inverse fair value gap here. You've also got an order block, which forms like this. That's an order block, that's an OB. There's different types of order blocks, but I don't want to get into too much complexity. They're just order blocks. Propulsion blocks are just order blocks. This order block trades into this one, and because this trades into this one, then you get that expansion. Same thing here. And order blocks, like I said, they're like market structure. So when we're in a bullish trend, if we keep forming bullish order blocks, if we keep closing above the down close candles, that's how you know the market's going to continue up. That's pretty much it. So that's that. I'll probably start for another 5-10 minutes, guys, and I'll call it there before the next macro. Hopefully you got something from this live stream, and let me know if you like this. Let me know, and you never know, I might do one of these once a week on a Friday. Once a week on a Friday, I think, for the meantime, but it will change. It will increase in the future. For 100K funded, would you trade 1 or 2 mini? Just depends on your goal. Depends on your goal, because even for me, like on a 50K, I'll trade micros, minis. Depends how big the range is. Like today, there's no way you can use minis. There's no way. It's too big. And depends on your experience. If you're still starting out, I'll just use micros to start. Like honestly, if you haven't, my advice would be this: if you haven't had 5 winning days in a row on an account, and I mean in a row, like 5 winning days in a row, then I wouldn't even be on minis. I'll just use micros and I'll focus on the skill first, and let it do its thing. A big part, so obviously with most funded accounts, you need say 3,000 to pass. This would be a realistic timeline for a lot of people, and then I'll mention this and I'll answer a couple more questions and I'll hop off. But a realistic timeline would be this: 2 months to learn the actual strategy, 1 month to demo trade that strategy. Then what I'd personally do is 2 months of this. So for example, in an eval, and take a screenshot if you want, in an eval, what I would do for 2 months is I would try to get 5 winning days of $200. Doesn't have to be consecutive in a row, but your goal is to try and simulate what you need for a prop firm payout. If you can do this 5 to 6 times, then I personally, this is what I've done, then I go more aggressive on the eval and I cruise on the funded. Because my philosophy is this: if in an eval you can prove that you can get a payout, like you can simulate the conditions, then you may as well pass the eval quickly, and then when you get the funded account, just do the same thing. Does that make sense? This is not financial advice by any means, but this is what I've done. And I think it works very well, because how many people can relate to this? This has happened to me too when I started learning. The normal person tells you to do this. They say, all right, get an eval, risk $100 per trade, and try to make 3,000. What happens in reality? You get to day number 9, day number 5, day number 10. Maybe you're up $600, and then guess what happens? You blow up. Account is gone. Realistically, that's what happens for a lot of people. Boom and bust, boom and bust. The same cycle. And you never actually prove to yourself that you can actually make it. So instead of doing this, take the pressure off, and in the eval, simulate the funded conditions. Because then in reality, if you can then pass an eval in 1 or 2 days, 3 days, maybe 4 days, with higher risk, then when you get to the funded account, you're literally just doing what you did in the eval, and you're going to get a payout. Much easier than doing it this way. And that's my advice for myself, if I could go back in time. Simon, beautiful analysis. Yeah. Thank you. Yeah, not a bad NFP day, to be honest. Like, it's quite nice there. Nice little framework. But that's what I'd say. I can make a whole video on this. I have made videos on this before, but in terms of accounts, that's what I'd be looking at. Any more questions, guys? I'll hop off in a couple minutes. Hopefully you got something from today. 5 or 6 micros. It depends. Like, start with a very small risk, and then you can build it up, is what I'd say. So say you pass an eval aggressively, right? Say you pass it in 4 days or in a week. Let's just say a week. The chance of you tilting in a week, or for most people, could happen, but there's more chance of you tilting after 30 days rather than 5 days, which is why the philosophy that I like to use, pass the eval quicker, get into the funded quicker, works much better for a lot of people. Once you get onto that funded, then you cruise in terms of, look, your goal once you get into the funded is just to get a payout. That's it. If you haven't had a payout before, that's your goal. So for example, you get the funded account passed, you calculate how much that costs. A lot of people say, well, I'll get the funded account passed, and then I got to build a 5K buffer. And then once I build a 5K buffer, then I'll get a payout. But guess what? They're not going to get to the 5K buffer because they're setting too high, unrealistic goals. Instead of that, you get into the funded account if it's your first time, and you literally say you're doing the minimum required to get a payout. That should be your mindset, the minimum, not the maximum, not building a buffer, the minimum. Because what's going to do then is, say you buy funded futures, $100 you need for a winning day, $100. That's doable. That's very feasible. 5 days, 100, 100, 100, 100, 100. It's 5 handles with 1 mini. That's very doable. And what do? You take it all out. Yes, your account's gone. You take it all out. 500 US. You pay, what is it for a starter account? What is it, like 90 US? You profit 410 US from that account. And you've proven to yourself now that you can get a payout, that you can pass an account, and that you can do it. Whereas person number 2 is saying, I'm just going to build a buffer. They get those 5 winning days. They've got $500. It's the first time they pass an account, their first funded account, and they're building the buffer. And then they get to about 1,000. This will happen to me. 1,200, my first funded account. And then what happens? You lose. And you go, I'll just take one more trade. You lose again. No, we'll go one more. And before you know it, the account's gone. You wish you would have taken something out to at least pay yourself, but now you can't. And then what happens? You aggressively try to pass an eval, you take silly trades, and it just doesn't work out. That is my big piece of advice. You know what I mean? Like, you get an eval that's very cheap, like even the new core accounts, the core accounts in My Funded Futures, great practice account, or Apex 90% off. You literally get an eval for the purpose of just practicing the payout conditions. Like, literally, I'm telling you, it'll change the game for you. And I wish I could go back and do this. I've helped a few people like this because they were in that same cycle. They're in the same cycle where they would be in the eval account and they might get like 5 or 6 days. They might be up, 1,200 or 1,000 or 1,800. But guess what? The longer time that goes on, the more chance there is that someone tilts, and that person never gets to see the top, never gets to see the passing of accounts, never gets to prove to themselves that they can simulate what a payout requires. That's what I'd say. Even straight to funded, as you're saying, straight to funded accounts. Like, the less time you spend in evals, the better. That's just the truth. Because if you're going to tilt, if anyone's going to tilt, make mistakes, whether it's me or you want that to happen once you've already taken out money, not when you're trying to trade an eval that's not counting towards, stacking up the payouts. But you can't do that unless you prove to yourself you can get the payout, which is why I'm saying, like, get a really cheap eval and then simulate those conditions. So you're not wasting money. You're literally getting an eval not to pass it. You're getting a $19 US eval from Apex, and you're saying to yourself, all right, in the next 4 weeks, let's see how many sets of 5 winning days I can get. Now, if you can't do that 5 times within like 3 months, you're not ready. You got to keep going, working your psychology until you can get that done. And then once you can get that done, then yeah, as you're saying there, you can go to straight to funded accounts if you want, or you can pass aggressively, whatever works for you. Go to a straight to funded account and then just do the same thing. You're primed to look for the same thing now, so it all makes sense. That's what I'd say. If we inverse the 3-minute busy, 3-minute time frame, what's happening there? 3-minute busy. Busy civvy. I don't really see any 3-minute busy. Down here there's a busy, but all I see price doing is pulling back into OT. We could step down. Yesterday we did this. We did that in New York session. We just kept stepping down. Could happen. Bit of a rant, but I think that's important. If you're struggling, and if what I described sounds like you, in terms of accounts, then I would test that out. Is bias necessary in macro? Yes. You need a narrative. I don't like the word bias. Bias is used, it's used too much, and it's used in a way that tricks people. You need a narrative. You need a reason as to why the market should move. I'll do a recap of this YouTube live tomorrow, or in about 9 hours, 10 hours time in the morning. But you need a narrative, right? You need a reason as to why you think the market's going to move. You can't just long or short any inversion. You can't do that. It won't work. Just because it's a macro, you can't do that. You need more context. Straight to funded, remove the eval. Which company for the $500 payout? Just an example. It's just an example. So, like, for example, my funded futures, you can get a core account for 77 US. You need 5 winning days of $100. That's $500. I think you can withdraw like 400 because it's above your buffer, but you're still going to profit. And all I'm saying is that when you're first starting out, you want to just prove to yourself that you can do it, but you want to put yourself in the best position to do it, if that makes sense. And you just got to think in probabilities. Is there a greater or less chance of you blowing up in 10 days or 5 days? The answer is 10. The more time that goes on, the more chance it is that anyone makes mistakes. It's the same in trading. Look, same with trading. If you've had a 2 trade win streak versus a 10 trade win streak, who's more likely to lose the next trade? The person who's had the 10 trade win streak. And it's the same with trading. It's the same thing. And that's how prop companies get you. That's how they get you, because they are promoting this way of trading, which does not work for everyone. For some people it does. And so you got to find the account that suits your kind of psychology and your rule base. That's what I'd say there. So think in probabilities, So if you're the type of person that makes mistakes every week, then try to make it every second week. Make a commitment to yourself to push it back. Commit to 5 days, no breaking rules. Just see what happens as an experiment. Just see what happens. Test yourself. And then as time goes on, it'll be longer and longer and longer. You'll still make mistakes. You'll still over leverage. You'll still lose accounts. You'll still get payouts. You'll still do everything. But you'll be able to come back from the bad mistakes easier. And those bad mistakes won't lead to more bad mistakes. They'll just be a bad mistake. Not the plural. It'll be a mistake, not mistakes. And so that's kind of how it goes with trading. No one's perfect. But that's what I'd say. Anyway, any last final questions? Going to end the stream in a sec. It's been great having you guys here. Bit of a different stream today. We talked through longs. I'll do a little snippet tomorrow morning, just reviewing what we talked about. And yeah, thinking of doing this once a week on a Friday, probably for New York session at this point. Could even be a little bit earlier, like before open. But that's kind of what I'm looking at. Hope everyone has a good rest of the session. Stay safe with it. If you haven't taken a trade, there's no need to trade. It's Friday, relax. Weekend's coming soon. And we'll talk very soon. Look out for that recap tomorrow. If you're not in the free Discord, join it. Right, I've got a checklist there. Join that, use that checklist. And actually, if you've got time now, compare the checklist to this trade framework and you'll see why it's A+, why it's better than just an average trade. That being said, guys, have a great weekend and we'll talk very soon. Peace out.